so here we have some moving averages applied to the chart, and we also have the ADX in there as well. Now, as you may recall from the other video, in module 2 we was talking about moving averages. We've actually got 3 here, and there's 2 exponential and 1 smoothed. The exponential moving averages will follow the market prices a little bit more tighter than the other ones, such as linear weighted, smoothed, and there's one more other one, I believe, I can't remember off the top of my head, and a simple one as well. Alright, most traders will tend to use the exponential moving average. Alright, and the different types of period settings, again, people use different settings in their period box as well. But what I'd also tend to use is either a 50 or 100 or a 200 moving average as well, set to an exponential. Alright, I'm going to just give it a different color for the time being. Alright, and basically traders will use this as a line to work out when the market is going to change direction. So when it hits it, you can see here that the market is, it's definitely re-established a new trend direction. It was initially going up, and now it's starting to come back down. Now you can see where it's hit the top part of it as well, and this is an indication that the trend is about soon to change once more. So some people have actually used this line, and they call this like the money line, because when the market has been going up or down for so long, the market needs to come back and eventually touch this 200 moving average. Alright, and it does. And then once there's a significant break from its opposite direction, you need to allow it to hit at least once or twice, and once it's sort of moved away a fair amount, then you can be safe to say that it's now a trend direction. But we've got some other moving averages on here as well, which act as kind of confirmation triggers to let you know that the trend has changed. This will only be more apparent on larger time frames than it will on smaller time frames, because you're going to be seeing more activity on the smaller time frames. Okay, these here are actually happening. These bars appear every day, as opposed to here where we're on the 15-minute time frame. Each of these bars are going to happen every 15 minutes. So you're going to see trend changes appear more often. But these will be like trend changes inside a trend change. For instance, you might have a trend going up. Okay, this could be your main trend. Alright, and this could be like your daily time frame. Alright, then you might zoom back down into a 15-minute time frame, and you might see similar activity going on, but now it's kind of really changing. Alright, it might change completely different, but this might be on the 15-minute time frame. So you're going to have trends within trends. So there was an uptrend going with the daily trend there, but the daily trend is still pointing up while this 15-minute trend pointed down. Does that make sense? Alright, same likewise on the 5-minute, 30-minute, 1 hour and 4 hour time frames. You're going to have trends within trends. So you're going to see this purple line that I've drew here. I'm going to just do this black, so if those of us that are colourblind can't see that. Alright, you should be able to see that okay. Now this one here, sorry, it's not an ideal colour for colourblind people. I'll just move that to green. Okay, so this colour here is a smooth moving average. This one here is an exponential set to 200. This blue one and this red one here, they're set to 12 and 24 respectively. Okay, and you can see that this black line does get hit quite a few times, and it can be quite, taxing on the brain, especially emotionally as well, that you're thinking it might come down and it's pierced off and it's gone the other way. Pierced off, that I mentioned there, that weren't the other word. Alright, so it's pierced off the other way. Okay, and it can get frustrating. So using the larger time frames, like 4-hour time frames and so forth, I mean, we can see that we've had this long trend going up, okay, and then the 200 moving average gets hit. There's like your warning number one, okay, and it's to let you know that this long uptrend is now to change. It's broken below and now it's hit the moving average again, and then it's hit it again. These here is like your money line. If it hits this again after the trend has been established, like the new downtrend, which is normally signified by these other moving averages that we have in here as well. We have this smoothed 24 moving average, and we have the 12 and 24 exponential moving average. Alright, and as they've basically, have all come underneath the black line, the trend is, just keeps on coming down. Alright, now here you can see that as the market's come through, it's tried to break the top part of that, well, we can call it the money line if you wish, the 200 moving average. It broke it a little bit, but it didn't close above. Then we got this little kind of note here, which is kind of like this kind of warning over here to let us know that we're about to change trend, because the market had actually broken above. Then eventually you see that every single one of these lines here broke that 200 moving average line, and then the trend re-established itself and went back up again. Alright, now that's just one method of using it. I'm just showing you the different ways that you can use these moving averages. Alright, now this one, as I say, is exponential moving averages. It's set to a 200 period, which is basically 200 4-hour bars going back into the past, and it's adding all of those figures up. Alright, and this one's an exponential moving average. Each of these have different properties, figures and formulas attached to them. For me, it's just too much to remember. I just want to see patterns that emerge in the market and see how I can take advantage of them. Alright, you can go ahead and search for smoothed moving averages, linear moving averages, weighted moving average, or exponential moving averages, and get an understanding of what it is that they're saying, and it will take literally about 3 minutes to see what that is. Alright, if you're into that kind of stuff. Alright, but for the most part, I think that at the end of the day, if you can see how these patterns are emerging, and you can make sure you can put that round peg in that round hole, you'll be just fine. Alright, so with that bearing in mind, we can use that knowledge and we'll combine it with the ADX. Okay, now the ADX, there are different ways that you can go ahead and get a signal out of this, and the first one is just take that line tool out, and you see where they cross over. Alright, I like to use that as a triple cross. Okay, and the triple crosses only happen every now and then. Now you will see, based on the kind of activity in the market, if it's a long move down like this, you will see sometimes that the market with the moving averages will take a while to all come up together and line up together and pierce off together, peel away from each other. Like for instance here, you can see where they've all met up at the same time, where over here you can see the market was quite fierce, and then eventually it started to move back the other way, but it took quite a while for these moving averages to really establish that link together, all touching each other at the same time, and it hasn't really done that, but it's basically a little bit off. Alright, and you can see that these happen every once in a while, where they all cross over more or less at the same time, all three of them. Alright, and then we can try and find patterns that happen in the market with the ADX when that actually happens, because sometimes when you see these crossovers, not necessarily all the time that you can actually make money out of it. So you need an extra one to confirm it. Alright. Now, to be on the safe side, I've noticed that the ADX positive directional index, you can see it's just above the 30 line, so that would be okay to jump in on that one, and then take it to the next support level, which is over here. Alright, and using the knowledge that we've just gained, we can see that this has actually come up to the 200 moving average, and now we can actually take that knowledge as well and actually go the other way. Plus we get some other candle formations at the top there, like an evening star, and which we'll get into later on, which lets us know that we're imminent for a trend change as well. Alright, also take a look at the moving averages. You see how the moving averages start to pierce away from each other? Well, the further away that these moving averages are away from the currency price, or even from its own neighbouring moving average, like this one here, and this one here, there's a bit of a gap in between each one. Well, the further away the gap is, the better. I've seen some people that have actually said, oh, well, the trade's going back the other way. Like, for instance, they've come down and they've seen it move down like this, alright, and then it's come back up a little bit like here, but it hasn't really hit the middle moving average or the one on the outside. Alright, so they get a little bit panicky and they close out when there was really no signal there to close out. Alright, the best time to get out, if you know that you're at the bottom of a trend, it's completely undisputable that you're at the bottom of a trend, then there's no reason for you to get out on the first or on the second moving average. You can get out when the prices touch the third moving average. In this one here, in this case, is actually the 24 smooth applied to close. Alright, I'm actually going to save this as a template for you as well, so you can just simply go ahead and load the templates up. Alright, so when you see these cross over each other, you want to try and make sure that the positive directional index is also above the 30. This will ensure us a little bit more room to get as much as we can out of it. Alright, that's just one method. The other method that you could use as well is that when these actually cross up together, it doesn't really matter where the positive or the negative or the positive directional index is, but as long as they cross at the same time. You can see that this one right here, they cross at the same time, but it doesn't actually sit above the 30 level. That's fine. That's another exception, because I've noticed that there's quite a few times when the market has actually crossed and it hasn't been above the 30 line, it's still gone up. So that's another pattern that we can look out for. Now, if there's only two lines that are crossing, the 24 and the 12 exponential moving average, if only two of those are actually crossing at the same time, then you want to make sure that the positive or the negative directional index is above 30, and also possibly to have the ADX signal line as well, the strength line, to be above the 30 as well, to ensure that there's going to be more power behind it. Alright, so let's see if we can find some more examples. Oh, also as well, it's also interesting to note is that when you see a signal appearing in the market, you want to try and be very cautious at where the signal appears. So here's a crossover right here, and then what we want to take a look at is at how far away that this crossover is away from the bar that's right underneath it, because we need to wait. Once this bar finishes, we need to get in on the next one. Alright, but this first bar is very important. Okay, if it's too far away, if the bar's up here and then we went long on the next bar, you'll find that it will come down. Alright, so we want to try and get in as early as possible, but at the beginning of that trend change. And to do that, you need to try and get right bang in the middle of when it actually happens. Like, here is a crossover right here. It happens, we're on a daily or 4-hour time frame, so depending on what time frame that you're actually working off, it would vary based on the the settings here on how far away it is away from the candle. And you need to sit there, because it's really no magic number. You need to sit there and persevere with the numbers to see what makes sense to you, where your comfy zone is, where to enter that trade based on how far away that candle is away from that crossover of the moving averages. Alright, so here is like a crossover here. It's alright, it's not too far away from each other and it keeps on going up. Let's see if I can find one where the crossover actually appears quite far away from each other. Here is one here. You see how far away it is, where they actually cross over, and then eventually the market doesn't really know what to do. It goes sideways for a little bit and then it goes back up. Alright, so if we found a signal like here is one here, it's not really a great signal, but look how far away it is, and it went sideways for a bit before deciding to go up. That's like an indecisive area. You don't really want to get into those kind of zones, because you're more or less gambling with the market. Alright, Here is another example, perfect example. This is the one what you're looking for, where they all move over at the same time, and then they go, then boom, up it goes. When you see that these moving averages, what happens, like I mentioned before, if there's a big downtrend and it starts to go back up again, you'll see the other moving averages kind of crossing over at different times. Alright, you want them to all cross over right to the bang on at the same time, and then have the candles be from a position where it's coming, you know, at a more or less least angle, like a least steep angle trend, like here, like how it moves abruptly down, and then eventually it takes a while for it to cross over. Here's a cross there and there's a cross there, but it's too far away. We want something where the market is basically started to relax after a big move like this, and it's gone kind of like sideways for a bit, and then there's been a bit of a range before it starts to take off, and then all of the moving averages start to line up, and that's when you need to get in. Alright, like you can see here, here is where the big move was on its way down, and because the move was so fierce, the moving averages couldn't really line up with each other at the same time until the market starts to basically try and work out where it's at. You see some fighting going on, and then it starts to sort of go sideways for a little bit, just a little brief consolidation, and then the market goes back up. I mean, this area here could be a demand area. Alright, so we could have used that, you know, in our favor as well. Okay, so be very cautious when you open in trades, and try and make sure that they are as close to the moving averages as possible. Like this one here is no good. Alright, it's not how close they are to its left or its right, it's how close it is from its bottom or from its top. Alright, here is where it crosses over there. How far away is it? Here is one where it crosses over here, but it, you know, that's where the candle is, right down here. If you went short on that, you wouldn't have made any money. Alright, if you went short basically on here, you would have made a little bit, because it's actually happening right on that candle. Okay, so be very cautious on how you approach those. Alright, and then just try and ensure that when you see the signal, if you see all three lines cross over at the same time, try and see if you can find one where the positive and directional index cross over at the same time as well, because that would be a good trade. If you only see two line up, only make sure that it doesn't matter where it actually crosses, you just want to see this red line or the green line above the 30 line. Alright, and sometimes preferably to have this ADX line as well crossing the negative or the positive directional index when there's only two. When you see all three and they line up all together again, that's great. That's another good example to get in as well. Alright, so I'll leave you with that video. Okay, and I will see you very soon in the next one. Bye for now.